Hi, and welcome back to the Business Career College video series. It's Jason Watt, and in this video what we're going to look at is the Guaranteed Income Supplement, which is part of the OAS program. We've covered OAS in a previous video. So the GIS is specifically designed for somebody who is collecting OAS, and you have to look at the OAS video in order to determine that eligibility. So we're looking for an OAS recipient. And obviously then they have to be age 65 plus, at least as of today. We know that's going to change to 67, but not for quite a while yet. And specifically we're looking for somebody who has low income. Now, one of the things that's worth mentioning here as far as eligibility, you may recall in the GIS video I had mentioned that 65 is simply the minimum age at which to collect OAS, but you don't have to be only 65. If we have somebody who comes to Canada at, say, age 57, they might wait until 67 then, or they would have to wait until 67 in order to be eligible to collect any OAS. They wouldn't get a lot of OAS, but they could actually be eligible for the full amount of GIS. So sometimes when we're looking at the benefit programs, we simply are looking at OAS as a trigger for GIS. We may not be so concerned about the actual amount of OAS that would be paid. So what do we mean when we say low income? This is really our important discussion here. So what we're looking at here, and I'll show you some exceptions to this, but for the most part, we're looking at your line 236 income. That's net income. And we're looking for that line 236 income to not be over certain thresholds. For a single person, this would be paid only if income is somewhere less than about $17,000. These figures change every quarter, as we're now used to with the Guaranteed Income Supplement benefits, but around $17,000 maximum. And for a couple, married or common law, doesn't matter, we're looking at maximum combined income for this couple of around $40,000. And once we're over those amounts, then there would be no more GIS. So you don't want to be collecting this. You have to have fairly low income in order to get this benefit at all. So how's it actually calculated? Well, for a single person, the maximum GIS benefit by itself is right around $700 a month. And for a couple, it's a maximum of around $500 a month. And again, these amounts change every quarter, but this is approximately where we sit today. And for a couple, it would be maximum $500 per month per person. Now, there is another little bit that can be paid here. And for a single person, there is an additional $50 supplement that's available. Or sorry, a $50 enhancement. Let's get that language right. And for a married person, there's an additional $35 a month enhancement per person. So each of them would be eligible for an extra $35 if income is below a certain threshold. Now, to get that $50 enhancement, this is only payable if your annual income is less than about $5,000. And for a couple, this is payable if your annual income is less than about $8,000. And those amounts change again every quarter. And to see the exact amounts, you'd have to look at the OAS calculator, which is available on the Service Canada website. But this is fundamentally how this works. So what we're most concerned with, and what's most likely to be tested around GIS, is how do you get this $7,000 and how do you get this $500 a month? So let's say, just to work through an example, that we have a single person. and my single person has annual income. We'll go annual here because there's a couple factors to consider when we look at annual income. So this person is taking money from a RIF. This person is earning income from OAS. This person has a little bit of Canada Pension Plan income and a little bit of employment income. So these are the things you're most likely to see tested as well. And let's say from the RIF we have $4,000 coming out each year. From OAS, which we know we have to have some of, let's say we're getting 5,000, near the maximum for OAS, maybe a little less because of less residency. And Canada Pension Plan, let's say we're getting about $6,000 here. And employment income, we just got a little part-time job here paying $5,000 a year. So when we look at the clawback calculation, the GIS clawback calculation, we have to look at what income to bring into this discussion. The RIF income we are going to bring into this discussion. The OAS we are not. That wouldn't make any sense because we have to have that income. The CPP we are bringing that income in. And the employment income is actually a little bit funny. We're allowed to have up to $3,500 of employment income, so we're only going to bring $1,500 over into this GIS clawback calculation. That first $3,500 a year is exempt from this calculation. So this person we see has $11,500 of income that would attract a clawback. So the first thing we see is that they are over their amount where they would get the enhancement. So this person will have no enhancement. So now we have a 50% clawback. Meaning that they are losing basically 50 cents for every dollar of income in that range. So they're going to have $11,500 times 2 is $5,750 of clawback applied to their OAS, or sorry, to their GIS, or we can figure out that amount per month, which brings us to right around $480, just a shot under $480 a month that would be clawed back. Now, if this were a couple, what we would do is we would take their total income as a couple, and then we would have a 25% clawback for that couple, but we would apply it to both of their amounts then. So with a $480 clawback, we see that this person would have been eligible for $700. We can see that here, but they have $480 of clawback, meaning that they will actually have $220 of GIS each month. Now this amount, this GIS benefit, it's indexed, and it's indexed to inflation each quarter, and actually it's paid tax-free. Both the GIS and the GIS enhancement would be paid tax-free. So not a particularly generous benefit here, but it is just designed to provide that little bit of supplement for somebody who is age 65 plus and has low income. Just like with the OAS clawback, we would do this calculation each year. So we would do this calculation in, say, 2014, and that would impact the 2015 GIS amount, and then so on. You do the same calculation in 2015, and that would affect the 2016 GIS amount. It's a fairly straightforward benefit. The only real complexity to it is just knowing the amounts that are going to affect your benefit, and it really is just that OAS amount that doesn't get included and that first $3,500 of employment income. Everything else would get included. If you did have dividend income, the thing to note here, just like with your GIS clawback, is that dividend income you would have to use the grossed up amount. And of course we've seen the discussion around dividend gross up in our calculations around investment income and how it's taxed. I hope that helps. Enjoy your ongoing studies.